Ngowi TV, informed economists and business perspective.
Bora kuelewa cha kufanya kuliko kuambiwa cha kufanya.
We Tanzanians, we witnessed a lot of interest from multinational companies.
That is one of the things and initiatives that we would like to have addressed with government in terms of if you're in the industry and we're looking for investors.
If it's borrowed well and spent on development expenditure rather than current, it's okay.
Industrialization has failed because accountants did not play their role very well.
Those people who had local shares in the country thought they had local content that supported the people.
And our policy, low volume, high yield.
And tax measures basically is talking about how much the government is expected to collect.
Because when you are borrowing, you are creating liabilities. But then if you turn these liabilities into assets in terms of infrastructure, roads, ports, airports, education, health, that's no problem really in the long
run. Professor Ngowi, you've done quite a number of research papers around incentives. We've been in these forums for quite some time. And I think sometimes we move 2 steps forward and maybe 2 steps backwards when it comes to the question around incentives and the rest to the bottom. From experience and also within the context of Tanzania, you could just paint a picture for us in terms of policy and practice. Are we doing the right thing? Are we on the right track? Are we making some changes in terms of how many we give out, how much of our incentives we give out? Briefly, you could just paint that picture in about 7 minutes and then we'll continue the discussion.
Sure, thank you. So I'll give that picture and of course mainly in Tanzanian context. And in order to understand incentives in Tanzanian context today, really you need a bit of history because what we are having today in Tanzania and maybe where we are moving really has to be understood in a broader context. Remember, this is a country that has a socialist past, and from 1967 to mid-1980, this is a time when we had denationalization. From 1967, to be more specific, with Ujamaa and all kind of stuff. Now this, in a way, to put it in the investors' language, distorted, the investment climate, distorted kind of, the cool regime that investors would like. So in the mid-1980s, we had what we call medium and far-reaching reforms in the management of the economy. This is the time now where partly now we started seeing investment incentives, tax incentives, and also, of course, non-fiscal incentives. They began around 1980 towards early 1990. But then the history is the regime that was in place between 1967 to mid-1980 was a little bit anti-private sector, anti-investment, and now investors needed an environment that will kind of reduce the risk that they will be seeing around. So you could see from mid-1980 there have been a number of incentives, both fiscal and non-fiscal, but I think in this context we are mainly focusing on the fiscal ones. And here, contrary maybe to what many people think, they are both really for foreign investment and also locals. Yeah, mainly for FDIs and of course local. But again, as my colleagues have said, because locals do not have enough capital, most of course ended up with multinationals, of course, that are operating FDIs. And you could see those are the ones that came through greenfield investment, but also those that came through what we call M&A, mergers and acquisitions. But then you could see what happened then is for one to become eligible to benefit from these incentives, had to have what we call Tanzania Investment Center Certificate of Incentive. We call it TIC, Certificate of Incentive. And this will depend on the amount of capital that one wants to invest in. I don't have really the figures as such, but then I know them. I've been in the board. So actually I'm in the academia, I'm also in the private sector, I'm also in the CSO, I'm in the media, so I think I'll be picking from both. But then for locals, the minimum threshold of investment that is needed is lower than for foreigners. Yet, it's still mainly really foreigners, multinationals, that have been benefiting more than locals in this context. So you could see again, on top of having certificate of incentive from TIC, Tanzania Investment Center, One also, depending on where you're investing, if you're in the special economic zones, for example, in the export processing zone, one also can benefit. And in the export processing zone, the condition is if one exports up to 80%, 80% of what you are producing, then one can benefit now from these incentives. And we are having quite a number of these export processing zones here. We have Mabibo, Benjamin William Kappa, we have Ubungo, we are having one in Bagamoyo, like a Kamali industry. We have really quite a number. So broadly speaking now, in Zanzibar, of course, they have their own regime, but then there is also quite a number of incentives. So now, it's almost 30 years, if you count around mid-1980s to now. Part of issues, part of discussions that we have been having, and maybe that's where Nelly says, maybe you're going back and forward, you know, there have been quite a number of discussions, and I've been really quite in part of those. I think my first publication came out almost 20 years ago, the age of Mr. Kamara. So it's really long. And the key issue was who benefits from incentives, who should benefit, who should not benefit. Now, part of issues have been now 30 years later. Yeah, are the rationale for incentives still in place, you know? Because in 1980s, we said, you know, investment climate was no good, the infrastructure was not good, roads, ports, airports were not so good, you know, skills and talent in the labor force, we don't have enough of them. You know, social amenities in terms of, I've done a lot on FDI. I understand investors who look at social amenities, you know, school, education, you name them. Now, 30 years later, have we not really changed the things? And I think we have changed things. Now, the question is, if things have changed to the better of investment climate, we might not have ranked well as Rwanda in the doing business, but we understand. Those of us who have been here, I'll come again with another year where most of you are not here. Those of us who have been here since 1960s, we understand exactly how infrastructure has improved, we understand how education has improved, all kind of stuff. Now we are saying, yeah, this should be matched by reduced, really, incentives. And of course, things are not exactly the way they are. So those are part of issues. But also, issues have been also, issues of debate have been, logically, if investment climate is bad, and investment climate is bad, like, you know, infrastructure, roads, ports, airports, because we don't have money. So what will be the logic? The logic is collect the revenue instead of giving them as incentives, and then use them to fix what is broken in the investment climate, to improve infrastructure, to improve roads, etc., etc. So those are part of the debates. But also some other issues that we have seen in our debates are the question of a misuse of incentives. Even where incentives have been seen to be necessary, but then unfortunately there have been misuse by beneficiaries. For example, if you read the Controller and Auditor General's report of 2017, some 500 plus pages, you could see, for example, in the mining sector, where some fuel really, that was supposed to be destined to multinationals in the mining center along Lake Victoria, really did not find their way in. And we are talking in terms of billions of shillings. So really, there have been, you know, those kind of stuff. There have been also a lot of debates on transparency. That yes, maybe incentives are okay, but then how transparent is the process? Yeah, because also this goes with the discretionary power of the minister. I understand now after prolonged debate, the power of the minister has been reduced to some extent. Now it goes through the parliament. Transparency, in my view, has also improved. Maybe we are not yet where we want, but at least now, if you visit the website of the Minister of Finance, you can see really. And I visited it actually yesterday in order to say what I'm saying today with authority. So you could see data, but only up to 2016. It's not bad really, but you can see who got incentives, for what purpose, how much, really quite a number, quite a list, you know, those kind of stuff. And these are issues that I think you have been calling for, but of course issues have been also revolving around the question of a need now to do cost-benefit analysis, you know. For every incentive that you give, what are you getting in the short term, in the medium term, and in the long term, you know, those kind of stuff. And of course, we have debated a number of those. We have produced quite a number of studies. I think my first publication came out almost 18 years ago. But then, among the biggest that came in recent years include, of course, the rest at the bottom that I contributed maybe 5-6 years ago. And then $1 billion question that we did with religious leaders in Tanzania. It is unfortunate, really, that we did the study, I think, 2013. And then 3 years later, we revisited the work, only to find that we are losing more. you know, 3 years later. You know, so it's, as you are saying, yes, there have been quite a lot of efforts from various actors. And these actors would include civil society organizations. We have worked with the Police Forum, of course, with Action Aid, with Oxfam, you name them. But also a Controller and Auditor General report every year released since Mr. Uto's time to now, Professor Assad, you know, who will be saying, please reduce incentives, but I think the song is exactly the same. When you read the Minister of Finance's budget, and we are going to read it here tomorrow, I'll be doing pre-budget discussion on ITV Live and then post, and then we got a number of those. Really, you'll see the government intends to reduce incentives, but we hardly see ourselves walking the talks. But also within this space, there have been people like religious leaders that have been very vocal in this area, and of course to urge for reduction of unnecessary incentive, and that is the word. The point is not really just to be blank against incentive. No. Really, those incentives that do not make sense. For example, we have what we call a standing committee on economic justice and integrity of creation, and our religious leaders in Tanzania. They have worked a lot in a number of those areas, and I've worked with them. And our friend Mark Kutis, those who know him, has also worked a lot of this. Let's say Roland, etc., etc. So you could see, to almost finish it up, we did a book last year, and a project called the Taxation, Institution and Participation. Those who know Professor Odd Fjellstad from Christian Michels Institute, we did a book on illicit financial flows called, really, you know, Lifting the Veil of Secrecy. We did a pre-launch in Nairobi, we did a huge launch in Dar es Salaam, we did a huge launch again in Zambia, and, you know, it's, again, those kind of stuff. So in terms of effort, I think, especially from the academia, if you are to defend academia, we have done quite a lot, as is the case for CSOs. So I think I will leave the rest now for debate. But then I'll say, you know, there are those, of course, who will be a little bit uncomfortable when you want to reduce incentives. And I understand. Tanzania Investment Center, its main purpose is to attract as many investors as possible, and one of those ways is to reduce, is to increase, of course, incentives. And I've been on the board for 3 years. I understand, you know. Of course, sometimes you become a little bit problematic. But then export processes also, again, you know, they have been evaluated by how many investments have you brought in. And this is a function of, again, of bringing, you know, of reducing incentives. So we have to know when we are discussing, it's, we also have to understand that on the other side, there are those who like to have as much incentives as possible. On this other side, there are those who like to have as few incentives as possible. So I think I have painted the picture. The question is whether I've painted it colored or black and white.